I came out of the retail development world. I've been in retail my whole life, and it's nice to be in a sector that's a growing sector. It's nice to be in a sector that people are actually asking questions about. So I'm pleased by that. And like CJ, I'm hoping that these conversations don't lead to more competitors. So let me. I think to start, what's most important, the word senior housing is a big umbrella. It's a big tent, and most people, pretty much everybody, doesn't understand it. And it took years for me to begin to really understand the uniqueness in various types of senior housing. So I'm going to try to very quickly break it down, and then we'll talk a little bit about Sunrise and the demand drivers for that. Senior housing really can go from a big spectrum, and it's a broad spectrum. You can go all the way from your Del Webb 55-plus suburban community with a whole bunch of cottages that are age restricted and universally designed with a 10,000 square foot common area and a pool, and it's unique to 55-plus people. That could be called senior housing. You take that, you make that vertical, and you get into senior apartments. Many of those are being built these days as well. 160 units, 200 units, nice amenities, maybe a concierge-style living. Again, really identified to 55 or plus, 65 in some cases, 62. That's another one. Another type of senior living in that spectrum, this is all independent living for those who are thinking about it, would be, as we were talking about earlier, a naturally occurring retirement community, or often referred to as a NORC. Those aren't investment vehicles, but they occur. And those are apartment buildings in Manhattan where the residents all get together and look after each other. That has transformed into a type of senior housing in communities. Beacon Hill started with this thing called the Village concept. And a whole bunch of single-family home people got together, started pooling their money, hiring people to help care for them and all their various amenities. Those aren't investment vehicles, but those are all different spectrum of how people care for each other as they age. When you move out of that independent living and you start needing care, now you start to get into various different spectrums. Now you can get into sort of the very older style of the continuing care retirement community. And that's where you go from your independent living all the way up into skilled nursing. So you go from independent living, if you need more care, you can get assisted living. Assisted living is defined as needing help with your 5 activities of daily living: walking, bathing, dressing, going to the bathroom, eating. 6 would be medication management, and now the 7th, which is burgeoning and growing dramatically, is dementia and Alzheimer's care. That's assisted living. Then you move from assisted living, if you need it, into skilled nursing. There's a blend over in skilled nursing and assisted living. So many of you have heard of different bankruptcies that are occurring in the skilled nursing world these days, and a lot of that has to do with the businesses have building leases. Building leases are escalating, drug rates and reimbursement rates are declining, and labor rates are increasing. Skilled nursing provides most today post-acute short-term care. So that's a CCRC all bundled. Now you break that up, and you have assisted living, and you have skilled nursing. So that's the group: skilled nursing, assisted living, well, hospitalization, let's say, skilled nursing, assisted living, independent living. That's a big world to talk about in terms of investment. And for you all, when you're thinking about investing, you're thinking about alternate investment strategies, they each have different demand drivers and different competitive avenues. I'm going to focus today on what I know, which is Sunrise. We're an assisted living and memory care provider. The other businesses are more competitive with multifamily. Our business is a care-based business. It's an operational business. So very quickly, Sunrise is really the founder of the world of assisted living as it's known today. Paul and Terry Clausen, 36 years ago, were looking for a place for their mom. All they had was the home, the fluorescent lights and the linoleum floors, and they realized that that's not what they wanted, and they created this home-like environment with a designated care manager, and that's what became assisted living. And for the last 30-plus years, I wouldn't even say 35, 30-plus years, it's been not even alternative. Most people wouldn't really invest in it. Most corporations wouldn't invest in it because nobody knew if it had legs. Well, it's got legs. It got through the last cycle. It is sticky. The revenues are good revenues over a long period of time. So demand drivers for us are clear. Everybody knows about the silver tsunami. We'll get back to it in a moment, but we're actually in the worst moment of assisted living in terms of demand for the next 5 to 7 years. because our average age is 85. You subtract 85 years from today, you're at 1932. We haven't even gotten into the war. We're in the silent generation. You look at the demographic curve, we're still going downhill. About 5-7 years from now, we have a little spike up. 10 years, it's off the charts. Our growth, which is still very strong, is being driven by old supply and filling in holes where they haven't been otherwise growing before.